Good morning, everybody. Welcome to our pre-market prep. We'll give everybody a couple minutes to come in. I know I was a little late, minute or so late getting on the screen there. So we'll let everybody file in. Thanks for joining us this morning. Appreciate it. Hope everybody had a great Thanksgiving, wonderful weekend. All right. Good morning, everybody. We'll go ahead and jump right into it. Thanks for joining us this morning again. This is Michael coming to you from Gamma Edge on December 1st. Happy holiday season, Christmas season. We'll go ahead and look at our three pillars here: Game Edge, sentiment, structure, and trend. As always, we start with our market trend model, which you're seeing on the screen here. The market trend model is based on the tick index. Again, you can research that at your favorite investing website. But the quick takeaway is the bolded white line is our CT, or what we call our cumulative tick. That's our intraday instantaneous cumulative tick. That helps us identify the overall trend in the market, as well as buying versus selling of market participants. And these shorter term moving averages that we put on there, or what we refer to as our railroad tracks in this overall time frame, just gives us an idea of the overall trend, whether it's up or down to the upside, trending to the upside or trending to the downside. As we've seen the past 3 days, obviously 5.5% roughly off the lows to the upside, and we've seen significant buying in the overall market by market participants. That is identified by the bolded white CT being above the shorter term moving averages, these railroad tracks, as well as moving above our colored ribbon, which is our longer look back period. Also identifiable up here via our breadth indicator, new highs versus new lows. Obviously, new highs continue to outpace new lows, so more stocks are being bought than sold, very easily to see, and just supportive of the overall move to the upside. And then our next frame is filtered cumulative tick indicator. This is plus 1,000, minus 1,000. These are obviously just larger block orders, basically institutional or larger market participant buying or selling versus the overall market. And obviously you can see they are above the zero line, and we had 2 linear up days basically with the filtered cumulative tick. So again, indicating that institutions were active and buying more stocks than being sold. So what we would look for now is the bolded white CT. If we do see a pullback in the overall market, we want to see it stay above the colored ribbon. Again, this could be a false move to the upside, and then you get a rollover of the cumulative tick and then start dropping back below the colored ribbon. So if you're in progressive exposure, as we always preach here at Game Edge, basically progressive exposure means you don't go full portfolio on a first move day to the upside. You keep increasing your overall risk through multiple days. And then if you get a sustained uptrend, you capture what we call the meat of the move, which basically is the largest portion of an upside movement, which is much easier to capitalize than picking the top or bottom of the overall market. So again, we want to see this bolded white CT stay above our colored ribbon. And our colored ribbon now is transitioning to a flip, or what we call a positive slope of the red above the cyan, where the red was below the cyan. That's a bearish state. Now we're transitioning overall to a bullish state. And our gate, or our triggers for our mechanical portfolios, have been on for a few days. So we've been entering positions in our P-Trans to PGEX, as well as our wheel strategy mechanical portfolios. And you can research those at gameedge.us or check out our X posts. We've had extensive posting on our mechanical portfolios. So again, quick takeaway is transitioning to a more bullish state. We want to make sure that we stay above the colored ribbon and do not see a failure and start moving back below the colored ribbon. So yeah, we'll check those at the end. I'll be happy to check any tickers at the end via our web app and go over the overall structures if you just throw those in the chat. So, all right, moving on to the SPX options complex. This is the largest most notional value. Obviously, you'll notice our new web app will be rolling out to our members soon. I posted a little bit about that, but basically all these columns up here are able to be drop and drag or customizable. and we're transitioning to a more widgetized dashboard. We'll be able to add more content from our Discord, which includes all of our tools, will be in a central dashboard. So it will be nice for overall members and users to be able to look at the content and the data very rapidly. So SPXA, we're call dominated above and below spot price, obviously still with the December expiry turned on here. So supported below, as you see the green negative or green net deltas. Again, that would be supportive of in the money calls. We do see these in the money puts overhead still. Those are just kind of hanging on as we've seen for the past few weeks. So again, those will continue to be a headwind as we start to try to chomp into those or push into those overhead. And you can see the gamma as well as the charm components of those in the money puts overhead. And then again, transition area is still fairly wide. Our implied open is roughly around 6,800. So again, supportive here out of the money call speculation up towards 6,880, and then we start meeting those in the money puts. So that's where we would anticipate some stalling and difficult to push ahead unless we see these red net deltas start changing to green overall. So call dominated, bullish in the overall SPXA, which is institutional, and our cruise ships are our larger tankers, which are steering the 40,000 foot view of the option structure, as well as the price action. All right, moving on the SPXP, all expiries turned on, as you'll note by the web app and our purple tiles over here. We are call dominated, easily to identify the IC for today at 68.805, 68.05, 68.10, as well as 68.75, 68.80. Again, if we're below that lower IC level, it's going to be difficult to push above. We'll talk about that on our net stack command here in a few minutes. You'll notice the GEX transition is fairly narrow though, but we're below it also. So again, two bearish components opening below the overall transition as well as below the close of last week. And then we have key levels here via our transition area. And again, within overall transition is just extremely choppy area, as it's not really a good definable structure and edge for us to trade. So we will be very cautious and patient at the open, kind of let the book clear and decide where market participants want to push the overall price action. And if we want to push back into the overall IC as well as the transition area, again, that would most likely be a choppy area also. All right, moving on the SPXP GEX ratio. Again, this is like a put call ratio, but it's we add a gamma, or we add a time component, which is gamma. This is more short dated call gamma versus short dated put gamma. Our put call ratio, our historical put call ratio, if you want to look at that, obviously does not give precedence to short dated positioning via the overall option structure. We feel like that's probably more important for zero DT as well as swing traders. So that's why we add the gamma and time component in. So quick takeaway for the GEX ratio is we're above 1. Again, that would be an edge to the bulls. I did force spot price earlier and we were right at that 1 level. So again, we'll still give the edge to the bulls via the SPX GEX ratio. Short dated call gamma is overriding the short dated put gamma. Also, what you want to see as SPX spot price appreciates, you want to see the GEX ratio continue to rise. This is just indicating how the money call speculation is coming into the overall structure and overriding the short dated SPX or short dated put gamma or put speculation. So again, bulls maintaining overall control via the GEX ratio. And we'll want to see that continue to the upside. So we'll continue to watch that day over day. All right, moving on to the delta balance. Again, this is just separating the individual portions or structures of the options complex. The left-hand plane, which is below spot price, that's our red dotted line. That would include your in-the-money calls and out-of-the-money puts. And the green dotted line is your out-of-the-money calls and in-the-money puts. Again, that would be above spot price. We call that the right-hand plane. And then the aggregates, the blue dotted line, that's the delta balance. And we want to separate these to see if each individual portion is changing via the option structure, via positioning, or are they all in confluence, indicating that spot price appreciation could be likely, or spot price depreciation if both of these are in a negative slope. So as of now, the green dotted line is to the upside, again, indicating out the money call speculation. Red dotted line dropping slightly, but we're above that 0 level. That's indicating the bullish overall structure as well as sentiment from market participants. And the delta balance is pegged at +1. So again, the aggregate definitely is bullish and indicating spot price appreciation could be likely. Now, on out in time, further expiries, not really much change. As we head into the middle towards the end of the week, delta balance stays at 1. Really, the left-hand plane and right-hand plane just stay entrenched above 0, again, indicating speculations just being maintained. But also this could indicate some choppy price action or stalling action, as we do not see a significant amount of out of the money speculation to the upside. It's just fairly flat. So again, we'll watch this. Again, 68.10 is that area we want to get over. And then we'll see if the overall delta balance is indicating out of the money speculation, or again, just staying stagnant through the rest of the week, which would indicate most likely flat and choppy price action. All right, moving on the SPXP net stack command. Again, this is highest sensitivity levels for today. I forced the spot price at 68.03, and we're roughly at 68.09, so will not be much change in the sensitivity levels. To the upside, you see these significant in-the-money puts overhead. Again, that's the IC. So if we're below that, that will be a large headwind to push above. And then you see the in-the-money calls below us, but you see the magnitude, basically 4 to 5 X of the in-the-money puts overhead compared to the in-the-money calls. So again, the in-the-money calls would be supportive if we head down towards 6,700, but pushing over 68.10 again will be most likely difficult unless market participants via the call speculation drive the spot price higher. We see the charm level again out of the money calls 68.75. Even if we head through 68.10 into the overall transition area, out of the money calls will continue to be a headwind, even though they're significantly above us. And you can see that within the overall zero DT structure here that we'll get to in just a second. And then the net gamma, obviously highest sensitivity level, 68.10 at those in the money puts there in the lower leg of the IC. And then Vanna, we do have the opportunity for Vanna to give us a tailwind if we do see volatility drop and we see out of the money calls come into the complex. As you see, the right-hand plane integral for Vanna is significantly larger than the left-hand plane. So we'll continue to watch that also. All right, let's move on the SPXP 0 DTE. We've drawn the drunken sailor range, which is the orange level here. Again, implied open would be at or at the bottom of the drunken sailor range, as well as the IC level here. And then we have the transition level here. So for most of the day, we're either going to be into the lower leg of the IC, into the drunken sailor range, or the confluence of the DEX and GEX transition. So again, within this overall structure here, it will be extremely choppy. And again, this leads to the overall market participants really not having certainty or confidence in the overall direction of positions or positioning of the complex. So we'll continue to watch that as we move into that. So again, our overall thesis for today would be to be patient, watch for our in the money, or sorry, the intraday out of the money versus out of the money, call versus put speculation via our vol-m command for directionality this morning. And then if we're below the overall transition levels, would be slightly more bearish. If we're in the transition levels, obviously that'd be a chop area. And if we move above the transition levels, we could be looking for spot price appreciation towards 68.75, which is what we spoke about on the net stack command. That would be the upper level, the IC, as well as the top of the drunken sailor range. And that's where we'd most likely be taking trades. If we get above the overall transition levels, we'd be looking for this green arrow, this move above the transition level towards the top of the drunken sailor range, as well as the upper leg of the IC for the most confident type trade for the day. And if we stay below the overall transition levels, as well as the drunken sailor range, and we see the intraday intraday market participants speculating with out of the money puts to the downside, we'd be looking for an overall short area to the downside. Again, we still have in the money calls below us, though, that will continue to be supportive. So we'd not be looking for a large move to the downside. These would be very short moves, most likely down towards the bottom of our expected range. Move here at 1.17%, which would be roughly around 67.50 to 67.65. So we'll watch that today. All right, thanks everybody for joining us. Again, we'll move on to the trading view chart, and then we'll do individual tickers. As I discussed about the drunken sailor range and the lower IC level will be an area we'll most likely see some stalling and chopping price action. If we get with the overall drunken sailor range, we could move back up towards this zero GEX and in-trans level for the full expiry, which would be 68.20. And then we have the overhead zero DT transition area at 68.25, as well as the full expiry. So you see multiple confluence levels overhead that could provide stalling, even if we get above the 68.10. And most likely this would be extremely choppy. And we come up here and look for a failure type action for an opportunity to move back down, or a retake of this transition level, zero DT, as well as the full expiry level. So for us this morning, very choppy action below transition within the overall drunken sailor range, and just a confluence of just significant levels overhead, which we discussed of in the money puts, will most likely be hard to see any significant price appreciation. Again, if we do get above transition areas, we could have a tailwind, and that would be a look for a move up towards 68.75, which would be the upper leg of the IC as well as the top of the DS. So hope that helps this morning. Sorry, everybody, a little bit tongue-tied getting back into the overall structure and explanation after a long weekend, but hopefully that was fairly clear. If not, ask questions. I'd be happy to answer them for a few minutes. And we can go ahead and look at individual tickers. I'm going to revert back to our older web app just for now, and then we can look at the individual tickers and then discuss any questions that anybody has. So SIL, I'm not sure if that is okay. So it does hit our 1,000 OI filter, but the total OI is very low. So just be careful there, understanding that this is probably not under significant dealer metrics control. It is call dominated. I'm really not sure what SIL is or what they do, but you see that actually only have monthly expiries. So again, understanding the structure or projecting an overall move with the structure would be very difficult. So I really don't want to do that, even though it is call dominated, but I'm not really sure what SIL is. So hopefully that helps. I really don't want to put much credence in this overall structure because it's only monthly expiries and the total OI is very low, obviously compared to a stock like Tesla. So, all right, Tesla call dominated above and below spot price, still looks fairly bullish with out of the money speculation to the upside. Oh, silver, sorry, yeah, okay. So what's the other ETF? Probably has a little bit more OI. We could look at that too if you want. So yeah, I think the SIL ETF doesn't have significant OI, but there's another silver ETF. I can't remember that has significant OI, I think. Anyway, on to Tesla. Call dominated above and below spot price. Again, structure still looks bullish for out of the money speculation to the upside towards 500. I know before the overall market pullback, we were discussing peak X and COI at 500, which is being maintained. Let's go ahead and look at this week's expiry. COI 460, peak X 437.50. Again, structure looks very bullish for Tesla. So if the market decides to continue to move up, I think Tesla would be one of the first ones that you probably should look at. And you see peak X and COI up at 450. Structure after this Friday gets a little bit more messy, but we're maintaining call dominated and out of the money speculation to the upside. So Tesla continues to be a strong, I would say, one of the stronger stocks within the overall positioning that I would stay with if the market wants to continue to move to the upside. So, all right. With that, thanks everybody for joining us. Again, gameedge.us. Go to the newsletter section, put in your email, like and subscribe on X or YouTube. Your email will be delivered in your inbox on the weekends. Again, go over our philosophy beyond the bell, discuss this actionable strategies, as well as our thesis and how we trade here at GameEdge. And then check out our free courses, GameEdge Fast Pass. It's our flagship options course. Again, all for free, goes over everything we do here at GameEdge. So make sure you check that out. And then obviously on X and YouTube, again, like I said, like and subscribe. You'll be notified when we go live. Most likely we'll do a midday recap for today if our team is available for midday. And then hopefully posting updates throughout the day. So quick takeaway is lower IC, 6805, 6810, very well defined. Drunken sailor range, fairly wide. We're below transitions to start. That's bearish, but we're within a call dominated structure. So that's bullish. MTM looks bullish, but we'd just be patient at the open. Again, let the overall structure and the books clear after a long weekend and see where market participants want to go via our intraday tools. So, all right, thanks everybody. Make it a great day. Manage risk as always, and we'll see you later.